This is one of the most interesting shifts in the money debate we've seen in years. Peter Schiff, one of Bitcoin's most vocal critics, is now saying something unexpected. He's bullish on blockchain technology, not just Bitcoin. Instead, Schiff believes tokenized gold on blockchain rails could end up being bigger than Bitcoin itself. And whether you agree with him or not, this conversation is worth having. All right, guys, welcome back to Ledger Prime, where we discuss crypto news, price targets, and everything blockchain. Make sure you subscribe, like this video, but let's get into it. This is a really interesting debate. In a recent interview, Peter Schiff revisited his long-running debate between gold and Bitcoin. He pointed specifically to a past discussion with Binance founder, arguing that blockchain technology makes tokenized gold just as verifiable as Bitcoin, right? Tokenized gold, so a digital representation on the blockchain of physical gold. That's what tokenized gold is. Here were his core arguments. If blockchain can verify digital scarcity, then it can also verify ownership of physical gold stored in vaults. In Schiff's view, Bitcoin doesn't have a monopoly on trust, right? Everybody trusts Bitcoin, but he views is the blockchain being trustworthy. Okay, so let's dig into this. What does that actually mean? First off, though, let's discuss what tokenized gold is and why he views it the way he does. So tokenized gold, guys, is exactly what it sounds like. Okay? Think physical gold bars held in a vault somewhere, represented by digital tokens on a blockchain like Ethereum. So each token would correspond to a specific amount of gold stored in the vault. Schiff argues that this model combines the historical stability of gold, wanting something physical, recognized around the world, with the transferability and programmability of blockchain. Because that's always the biggest knock on gold and why everybody thinks Bitcoin is so good. It's like, well, I can take $20 million with me on a computer chip in the airport and spend it, but try travel with $20 million of gold. What Schiff is saying is that somebody can hold your gold for you. It's counted up, it's whatever, it's divvied up on the blockchain, and then you can hold your digital tokens, your tokenized gold, in the same way you can hold Bitcoin, travel across borders and spend it, right? So in other words, gold as money, but with modern payment rails. So the gold never leaves the vault, right? But the digital representation, the digital ownership can transfer immediately. Schiff also criticized financial media coverage. He pointed out that while Bitcoin dominates headlines, gold and silver have quietly posted massive gains. Guys, go look at the charts. Gold and silver are off the charts, right? And this is kind of something, and people see this, and a big reason is because of inflation, right? And they think that the U.S. is going to print more dollars. But go look at the charts of gold and silver. They are almost straight up parabolic, especially silver. So Schiff also highlighted in the interview a key stat. He said gold ETFs hold roughly 170 billion in assets. Bitcoin and Ethereum ETFs combined are closer to 80 to 100 billion. Schiff attributes this gap not to performance, but to marketing and narrative dominance from the crypto industry. He argues that Bitcoin ETFs exist largely because Wall Street can't monetize self-custody. Okay, so what does that mean? It means they had to create the ETFs if they wanted to make money on this, because if you and I have our Bitcoin in a self-custody wallet, they can't make a dime off of that. And BlackRock wants to make money. So what do? Hey, we'll hold your Bitcoin for you and make money off of you so you don't have to, take the one extra step and self-custody it yourself. So the big question about this, right? And this is where Schiff in the interview made a really interesting point, but very important. Bitcoin's main value prop, censorship resistance, self-custody, which means I can hold, and I got my wallet right here. Let me grab it. I can hold my Bitcoin, right? Here's my Elipal cold air-gapped wallet. I can hold it in self-custody. Okay, that is a value prop. I don't need any bank, anybody else to hold it for me, and that is a value prop of Bitcoin. No counterparty risk. Nobody owns the network, and right now, I own my own keys. So Schiff asks the question: if investors are buying Bitcoin ETFs, are they actually using Bitcoin the way it was intended, or are they just buying another paper asset? Right? You don't have to agree either way, but the question is valid, right? They're not using it the way it was intended, to be decentralized. Eliminate the middleman. They're going straight to the middleman because they're lazy. So why is Schiff bullish on tokenized gold? Here's where the things get interesting. And just for transparency, Schiff does sell gold. He has a website, peterschiffgold.com, and he's starting a company where he will sell you tokenized gold. So, take it for what it's worth. But here's where the interview just got really, really interesting. Schiff says tokenized gold could be huge, potentially even bigger than Bitcoin, but only if the governments don't overregulate it. He believes merchants will eventually prefer being paid in gold-backed tokens instead of rapidly depreciating fiat currencies. In his view, this is where blockchain actually shines, not as a replacement for money, but as an upgrade to sound money. Guys, according to him, we could go back to the days where everybody paid for everything in gold and silver. Except in the way back, you had to carry a little sack of gold coins and silver coins. But now, all the gold and silver will be held in vaults and will pay with digital representations of physical gold and silver. Full circle. It's kind of crazy to think about. So, Schiff also discussed his own platform, which is tgold.com. The goal of his platform, and guys, he's out to make money too, but he does have some valid points. His goal: tokenized gold, right? Physical gold stored in a vault, represented on a blockchain where people can buy shares. Integrated with debit cards. Swipe your card, pay with gold. Secured credit cards, wallets and payments. He envisions a future where consumers spend gold-backed tokens. Banks would custody tokenized gold, and lenders would offer credit against it. And that's not crypto maximalism. That is financial infrastructure. So Schiff also acknowledged Ethereum's role, but he is not fully sold on Ethereum. His concerns are high transaction fees, network competition, long-term scalability, and that's why he favors a chain-agnostic approach, using whichever blockchain offers the lowest cost and highest efficiency. And this mirrors what institutions are already doing. So again, guys, we've talked about scale of chains when we're choosing something to invest in. And this kind of goes, what else can we take out of this? How can we read between the lines so we can make money and choose the right networks? Schiff said if he goes this route, he doesn't care if it's Ethereum. He cares about low cost and high efficiency. Because if you're going to transact in this stuff, you can't be losing all your money to fees. The rich don't get rich by paying fees and taxes. Okay. So what's the big picture here? It's not about gold versus Bitcoin. It is about what blockchain is actually best at. So Bitcoin excels at digital scarcity, censorship resistance. Tokenization excels at settlement, ownership tracking, programmable finance. And Wall Street is increasingly focused on the second category. So the final takeaway from all of this: whether you agree with Peter Schiff or not, this conversation signals something important. The future of finance may not be crypto or gold. It may be real-world assets running on crypto rails. And that's a narrative even Bitcoin critics can get behind. So guys, if you found this video helpful, make sure you hit like, subscribe to the channel for more in-depth thought experiments on crypto, Bitcoin, gold, and where everything is heading. Digital finance. It's going to be an exciting time. But remember, this is the world of crypto. It's highly volatile, right? It's crazy sometimes, which is why we need to stay focused and lock in because the world is about to be tokenized.